Hello everyone, welcome to this week's weekly market view for Monday the 5th of August 2024 to Friday the 9th of August 2024. My name is Vishal, let's get started. Alright, so let's start with the Nifty analysis, and I don't need to say anything much today, but we have had a big gap down. And usually what happens is whenever a big gap down occurs, there is always a panic that is set in the market. This panic can also lead or turn into an opportunity for some of the traders. So if you are a trader, then every gap up or gap down can more or less likely be also an opportunity for you. Anyways, let's look at the analysis for this week. Let's start with the weekly chart. Usually I always look at the daily chart and give my analysis. But if you look at the weekly chart very closely, we have had these bearish moves coming in consecutively. And right now, the market is a little bit indecisive. Volatility has also increased. India VIX has also substantially increased. So there is a little bit of an uncertainty in the market. And usually this happens when markets come to all-time highs and, the big institutions want to, do a little bit of profit booking. Is this the end of the world for the Nifty? Absolutely not. So if you look closely at this weekly level of demand, there is a level of demand over here. I'm just going to mark it this way. And sometimes when the market is in a panic mode or there are these big gap downs happening, it's also a good idea to maybe turn your focus from looking at smaller time frames and start looking at larger time frames. I've been seeing this even during the budget and the election news, even the corporate earning news. But this is going to be a very, very key level for the market, 23,661 to 23,220. Okay, now let us see how this level also looks more or less on the daily chart. So 23,600 is somewhere over here. So it is within this pivot area. And yeah. So this is going to be that key level. Now markets are in the middle of nowhere right now as we speak. It's more or less an indecision candle. Of course, the market has just opened and this candle can close in the red, close in the green. We don't know that. But what we are seeing also is that we are seeing these gaps that have occurred in the market. So there is one potential gap that is over here. And this is the better supply zone to say so, 24,800 to 25,000. And it seems like the market has made a short-term top, which is 24,000. We are currently trading at 24,300. If 25,000 remains the top for this market, then we might come towards the 24,000 handle. And this is the point from where we will have to start seeing whether the markets are still going to start building up, bullish positions or whether they want to create more bearish positions. So what I see on the market right now as we speak is right now the view which was initially sideways is now slightly more bearish to sideways. So any kind of a move into these areas of supply will probably again, prompt for more selling. I don't know whether the market is going to probably, get back all the way up to this point, but you never know. Any kind of news factors or anything can actually get the markets right up to those levels, and then we might see a little bit of more selling coming in. If that does not happen and market does continue to keep on moving down, then this 24,000 level is going to be a key area to watch out for. So any consolidation somewhere over here might again force the market to move to the upside, but any close below this 24,000 level will probably induce a little bit of more selling and will bring price into this weekly level of demand. And that is where we will see the potential market turning again to the upside. So keep a close watch on these levels for this week. We have 24,000 as a strong support on the Nifty and 24,800 as the first resistance and 25,000 as the second resistance. All right, let's now move on from the Nifty to the next index, which is the Bank Nifty. Now, if you look at the Bank Nifty chart, we had plotted these supply zones last week, and look how beautifully these supply zones or this supply zone actually played out. There was also a confluencing open interest level, and as I said, that there is a possibility that markets could turn from here, and that is exactly what has happened here. Markets did, hit this level of supply, consolidated, and then went down. And now we are again coming into a level of demand. If you go now to the weekly chart of the Bank Nifty, and if you closely observe this level, there is this level of weekly demand. And right now, in fact, we are coming closer to the level. We are not yet into that level. So 50,225, if you go to the daily chart, that level is sitting probably a little within this weekly level of demand. So it will be interesting to see now that the price is within the daily level of demand. Does the price force itself to go a little bit further down and then, take 50,000 as a support level and then start moving up? Or then it just continues to move down. If you look at the open interest, 48,000 strike price has the highest open interest. So slightly different open interest levels as compared to the Bank Nifty. Bank Nifty is more or less slightly looking a little bit more bearish than the Nifty as of now. So what I see is that in case if this level of demand holds, we might move into a little bit of a consolidation, again targeting 51,500 to 52,000 level. But let's say if that does not happen and if this level cracks or if this level breaks, then any retest or any new level of supply that is created here will more or less bring the price towards 48,000 odd levels. So these are the key levels to watch out for on Bank Nifty. And you have to be a little bit more careful because the Bank Nifty is one of the most volatile indices. So when you are trading, trade with strict stop losses. All right. We are now going to move on to the next index, which is the Nifty Financial Services. And the Nifty Financial Services is more or less, it has also gapped down, but it is not indicating extreme signs of weakness. These are the key levels. If you look at the supply zone, this is the supply zone that is more or less coinciding with the supply zone on the Bank Nifty. And then we have one more level of supply over here. I don't see these levels coming in the near term, but if the market does again, try to push up, then we might see another spurt of selling coming in towards 22,800 and 22,600 levels. The highest open interest, however, is at 22,000. Will the market come over here? We don't know whether it's going to come there today, tomorrow, but if the market does show a lot of bearishness, we could see this level coming. So now, if you see very closely, the range on the indices are slowly and steadily expanding, and the ranges are becoming more and more wide. So 22,000 is going to be the highest support level or highest put open interest level, and 23,500 is going to be the highest call open interest level. So every time when the price or is most likely to come into this area, we are going to see a little bit of a selling pressure on the Nifty Financial Services. And if the price continues to move down, then we might take a little bit of support at 22,800 first. If that level does not hold, then we will move on to 22,600. And then if that level also does not hold, then eventually we are more or less going to be touching the 22,000 odd level. All right, let's move on to the next index and let's talk about the MidCap Nifty. Now, like I said last week itself, that the MidCap Nifty is considered to be a beast when it comes to analyzing the market, and you can see very, very clearly and very vividly from this diagram over here that we have this area of demand right now, and price is more or less sitting within this area of demand. We have a slight violation, but because we have this open interest level, prices are taking a little bit of support at this level. Now, what are some of the key things to know? We have a new level of supply on the MidCap Nifty, which is 12,800 to 13,000 levels. And we also have a level of weekly demand, which is right here. So let me just mark this level. So this is a key level of demand, 11,764 to 11,230. Let's impose this on the higher time frame. And more or less, things will fall in place somewhere over here. Right. So this level is slightly below the 12,000 open interest level. But again, we have another level of demand which is not within the higher time frame. But you can see over here that it is confluencing with the 12,000 handle. Okay. So now I'm keeping this demand zone on because I want to see whether this demand zone holds or does not hold for the week. But in case if this demand zone breaks, then most likelihood that price will start moving down towards the 12,000 handle, and then more or less take a little bit of support and then start moving again to the upside. Like I said, the markets are still in a very strong uptrend. So any kind of correction or any kind of corrective move, whether it's the sectors or whether it is the indices, it is just going to be an opportunity to get in again. All right. But you got to, monitor the correct levels, and you need to see how things fall in place at those levels. All right, let's move on now from the MidCap Nifty to the BSE indices, and let's start off with the Sensex. So here we can see that we had this level of demand, which was a tested level of demand, and today this level of demand has violated because of the gap down. And now we have new levels of supply. The first level of supply being this very, very important area here, 81,357 to 82,070. And then we also have this gap level of supply. Now we can see that there is a big confluence of the 81,000 level confluencing over here. And as compared to all the indices today, Sensex is showing a significant strength to the upside. Let us see whether this strength holds or whether it is just a move where the markets will probably just move a little bit sideways and start moving towards the downside. If you look at the weekly chart, very similar to the other indices, we also have a demand zone on the Sensex, which is the weekly demand zone, close to around 77,800 odd levels. Okay, so 77,800 odd levels, more or less would fall within this area over here. Right. So this is going to be a key area of demand for the market. And if the price does come into this area of demand, we might likely to see a bounce coming in. And in case if that does not happen, and before the price hits the level of demand, if price goes into a level of supply, then either we get a potential turning point from this level, or the market might go a little bit deeper and then again move to the downside. So these are the possible scenarios. Right now, the market is in the middle of nowhere, in the middle of demand and supply. So right now, we can assume that the markets will tend to remain more or less sideways. So they could become bullish tomorrow, day after tomorrow. But at the moment right now, because prices are in the middle, our bias is a little bit more sideways. Okay, so now we are done with our analysis for the indices. Now let's move on to the index heavyweights. So let's start off with first with Reliance, and let us see what is Reliance doing. And pretty much we had plotted this level of demand on Reliance, and today we can see that prices nearly got there, barely came and just touched the level. And we also see that there is a confluence of an open interest level over there. Now, what are some of the things what Reliance is telling us? Let's go to the weekly chart of Reliance. So within the weekly chart, although this demand zone may not be a great level of demand, but because it's a level of a weekly demand, we can still say that this weekly level of demand can still hold unless and until obviously it breaks. But if you look at the daily chart right now, there is this drop base rally strong level, which is also made a all-time high. And what is more interesting to see is that we are also seeing a confluence of the highest put open interest level at 2,900. So if you see these confluences within your higher time frame levels of demand, it's most likelihood that this level is unlikely to break in the short term. Of course, anything can happen, but this might act as a strong support. And then from there on, we might see Reliance again moving first towards the 3,000 handle. There is a level of supply over here. But in case if the markets again become strong, I don't see this level of supply holding. So eventually I see if the markets do become strong, that is, then we might see the supply zone violating, then a retest, and then eventually moving towards this area. Okay, so Reliance is in a key area. which is also telling us that if Reliance holds on to this level, then the move in the Nifty is going to be to the downside is going to be a little bit uh, lesser as compared to what we would have all expected, because Reliance is in demand, right? And Reliance is a heavyweight index. It's more likely that Reliance will also pull the index up if it starts moving. Let's move on to the next stock, which is HDFC Bank. And if you look at HDFC Bank, all right, so let's start with the weekly analysis of HDFC Bank. And as you can clearly see that the markets are consolidating on the weekly chart, showing a little bit of strength. Last week closing of HDFC Bank was pretty strong. In fact, on Friday, although Bank Nifty was showing comparatively a lot of weakness in the market, HDFC Bank was actually holding very, very strong. So that was the stock which was actually supporting the Bank Nifty. However, today, HDFC Bank has opened gap down. We are still holding on to this support level over here, which is at 1600. And if you go on to the daily chart now, this is going to be a key area on HDFC Bank to watch out for. We have already touched this area once, and I have been time and time mentioning that this is not a good area to go short on HDFC Bank. Any kind of consolidation or a slight strength or a slight move will probably again take HDFC Bank to the upside. Okay, so we might now see a little bit of a consolidation over here. We may again see a retest of the 1600 level, but because this level of demand is a very, very strong level of demand, we might see HDFC Bank eventually hitting 1650 and then moving towards 1700 levels. So you've got to be a little patient, because this is not going to be a very, very fast moving stock. But yes, as you can see over here, that once it takes off, then, it just goes and moves very, very strong. Okay, so let's wait and watch as to what signals HDFC Bank is giving us, because more or less those signals will give us a little bit of a track on where the Bank Nifty is likely to. Okay, so this was the first part of the analysis. Now we are going to move on to another favorite, which is the commodity analysis. So I'm going to load the commodity charts here. And do give your valuable feedback at the end of this this video when you are finished watching in the comment section as to what you like about these videos and the inclusion of the commodity markets as well. All right, so let's start with gold. And if you look at gold now, gold took support at 68,000 level. Again, these open interest levels are phenomenal, because although there was no level of demand over here, these lines have shown that these levels, based on the futures and options data, does show us key areas of support and resistance. All said and done, if you look at now the gold chart, and if you look at the daily chart of gold, we are kind of retracing back into this area of supply. Like I said, I was not very, very keen in shorting gold over here. I was only and only keen in going short on gold over here. So if prices do come towards this area of supply, we may see some selling pressure on gold, also because of the confluence of these open interest levels over here. Right. So if market turned from 68,000, then it's also more or less likely to turn when it gets to 73,000, 74,000. Okay, there is nothing in the middle. And as you can see, as the gold prices are moving up, the open interest on the put side is also shifting, creating these interim supports. Okay, so keep a close watch on this level of supply. 72,636 to 74,973 will be a key supply on gold. Let's move on to the next commodity, which is silver. Now, as compared to gold, silver has painted a slightly different picture. And as you can see, silver is actually respecting this supply zone. All right. Now, what could be some of the reasons why silver is respecting the supply zone? If you closely observe, there is an open interest level over there. And maybe that is also one of the reasons why these 85,000 call sellers are not allowing the price. The moment it gets here, there is more selling pressure. And also you can see now 82,000 is also acting as a support level. Now, within these areas, we have this level of demand. And if you can closely observe, on the 29th of July, we just barely touched this level of demand. And now we are more or less pushing or trying to push to the upside. Like I said, again, I'm absolutely not keen on going short on silver at these areas. I do feel that silver will more or less eventually break this 85,000 odd level, retest this level as support, and then probably move on towards 88,500 odd levels, and then eventually move towards 91,570. All right. So just like gold, silver is also more or less likely to move to the upside. Okay. But let us see whether that happens. Okay. Let's move on to the next commodity. Let's load copper. Let's look at the copper charts. Futures. So last week on copper, also we had been talking about some key levels of demand and supply. Let's go to the weekly chart of copper first. So if you look at the weekly chart, more or less this level is literally screaming at you, isn't it? I mean, without a doubt, right? Do I want to now engage in copper and force myself into taking a trade setup and not wait for this level? Absolutely not. So I'm very, very keen on this level, and I'm assuming that when the price comes in this weekly level of demand, we are going to see a strong move on copper. And when that move comes, it's more or less likely to go towards this supply level over here. All right. So keep a close watch. Right now, we do not have any significant confluences of open interest here. Of course, all these things change as the price will start moving more and more sideways or more and more bearish. But this is going to be a key level, 770 to 745 as a level of demand, and 848 to 882 as a level of supply on the copper weekly chart. All right, last but not the least, let's talk a little bit about crude oil. And let me just refresh the, in fact, I'm not looking at the correct contract of crude oil, so I need to change the contract of crude oil. So let me do that. It's like this. Let me just refresh the chart here. Yeah. So now the chart is much, much clearer. Perfect. So I've already marked the levels of crude oil, so I don't need to say anything much about these levels. This is a level of demand. It's already tested once. We have strongly come into this level once again. Will crude oil give us a bounce from this level? We have a confluence of open interest, but also note that there is the strongest open interest level at 5,800. And without a doubt, you can closely keep your eye, because there is also a very subtle level of demand sitting close to around 5,800 levels. Since this level has already tested once, it could test multiple times. But in case if this level of demand breaks, then most likelihood we are likely to test this level of demand on crude oil, and then probably see a move to the upside. In case if crude oil doesn't or does not give us a move to the downside and it again starts retracing to the upside, then again we have these levels of supply. And within these levels of supply, we also have the open interest levels, which is 6,500 and 6,600 levels respectively. So it'll be interesting to see whether the crude oil script starts moving down first, reacts to a level of demand, and then starts moving up, or then before it hits the level of demand, it hits level of supply and then starts moving towards the level of demand. So these are the potential opportunities on crude oil: 6,440 to 6,623 on a level of supply, and 5,807 to 5,656 as a level of demand. All right, everyone. I hope you enjoyed this week's analysis on both the stocks, indices, and the commodities segment. Do give your valuable comments in the comment section. We appreciate all your views. And do give a thumbs up, do give a like, whatever you like about these sessions. And definitely keep on watching. And if you're still not subscribed to the Sher Khan Education YouTube channel, hit the subscription button and do let us know what your feedback is. Take care, everyone. Have a lovely week and trade safe, trade well. Bye-bye.
This should not be treated as a recommendation. Please conduct your own analysis or consult a financial advisor before investing.